The broadcast is now starting. All attendees are in listen-only mode.
TGIF Warriors, I'm ready for the weekend. How about you guys? So really the week was made yesterday with the US dollar yen failing from 110.20, manifesting. Hi Martin, how are you? Well, it looks like Greg took profits on his S&P. I'm just showing some of our non-subscribers. Blake had a great, he had some very nice trades yesterday. I think everyone, if you're following what we were doing here in Face, and if you're a subscriber, you're doing okay. So Greg, yeah, 1.3%, he took it in. Blake caught that triangle. Blake called it a day trade for 1% yesterday. So I always think Friday is a great day to sign up because you have the whole weekend. You have the whole weekend to just learn to navigate around here. And I'm making a guarantee right here. If you don't think that you got your dollar's worth in 10 days, I'm going to mail you $1. Okay, which will cost me $1.50 with a stamp. You never know what the price of a stamp is anymore, do you? In fact, I think they have a futures contract on stamp prices now. I'm just kidding. I'm a little punchy. Okay, well, that's the secret to trading, Martin. Perseverance. Oh, you tried the trial, Martin? Okay. So what do I have to do? Send coins? Let me know, okay? I'll go look for. Now remember, don't be penny wise and pound foolish, right? So being in the UK, everyone knows what it's like to be pound foolish, but don't be penny wise. If you're not happy with your broker, you know where to go, right? Give Trent a call at Forest Park, all right? Get the reimbursement program going for you. So as you go along, taking our trades or pattern and plays, your subscription is being paid for. You guys remember we won Best New Contributor on FX Street, so I'm just doing a little bragging. Okay, and you know what? There is going to be I'm not even using the new site, but they're pouring a ton of money into upgrading everything. But it's my contention that it's not the as much the cutting edge of a website as it is the people and their thinking and their communication skills of explaining something that's pretty difficult and making it simple and easy to understand. And everyone in here does that, even if it's not in their native tongue, like Andre, like Steve and Stelios. Okay, so give it a shot, and if you like it, you'll make a decision before price increases bring ForexAnalytix to market value. All right, everyone. So let's get to the charts. Pretty classic in, the yields went to 61.8. We were here. Someone was asking, well, what's your reason for being, negative the yen? It's because, a few of us were looking for this to be a failing rally. Gregor showed it yesterday. Pretty negative day. And if we get a quality like this, could take us all the way down to the 260s in here. And that was a pretty important area there. Have a weekly 200 coming in at 254, but this double top right here is my expectation. I think it was 263 right there. High 247, 264. Okay, so if we had something like down, up, down with equality, we should get there. Okay, now remember, this is no one's bullish bonds. If you listen to CNBC, you know, this is a great opportunity to short bonds. You know, that's what people are saying. You know, they're convinced this is the end of it. So that's not very long term. That's because it's a yield chart. But I'm curious, if I look at a monthly chart, is there any kind of bear case to be made? Let me see. Or a bull case? You know, actually, as bearish as everyone is in the bonds right here, I don't know. It looks corrective to me. So why can't we really go? I'd say the biggest surprise would be some type of risk-off deflationary move and one more high in bonds. And that means everyone who's saying be in commodities might be wrong. In fact, Jim Welch told me there's an ETF with my initials. I'll go to my page, Blake, so I don't pollute yours. That's a new commodity basket. Let's see, I never looked at it, but when I was talking, there it is, Bloomberg Commodity Index. It's an ETN. Okay. Doesn't look that good to me. So a lot of people trying to bottom pick commodities here, and you know, maybe that's a monthly. Maybe. I don't know. I would guess if the bonds are going to do what I'm going to do, what I think they're going to do, the commodities will get cheaper. That's my best guess. And the other trade, two things I want to point out for the weekend to you guys is, you know, we were negative the dollar last week, and I kind of had a line in the sand here that it crossed. So I go home neutral the dollar. See if that line's still there. Yeah. Well, it's right there. Okay. So, you know, I guess you could close above it and then fail again. But, you know, like I said, closing back above the support, this looked like a breakdown, right? You had a breakdown, you had a retest, and then a new low, and now we're back above it. That's not too bearish to me. Everyone see that? So I know there's higher numbers a lot of people are looking for in the euro and so forth, but maybe the easy money was made in the euro from last week to now. And still my contention, it was a, you know, just a correction, right? Just a correction after a big decline. So who knows, maybe this is, you know, 4 and we get one more pop up. Actually 19 was my target, but for the week, I think we're up on the week. Yeah. So I have some confluence here, 119.80. Yeah. I don't know what to do with the dollar right here. Maybe Blake does, but I don't like the fact that you had a break, you had a failure on the Dixie, and now we're back above it. So that's my view. When it comes to the US dollar yen, I'd stay with that. You know, never anything wrong booking profits. You know, from the 110.20 level, you still a good trade, 76. Looks like it's trying to rally, but I'm more in the camp because it's having a pretty negative week. Well, unchanged on the week anyway. That I'd give this a chance and sell all rallies, you know, maybe back to 980 or something next week. It's my contention if the bonds do what I think they're going to do, that we could have equality here in the yen. So that's 300 pips from 1020, gives you at least 720 with equality. So still bearish yen. And maybe one of the reasons are no one's bearish anymore in the S&Ps. NASDAQ made the long-awaited 3 drive to a top formation. I actually have higher objectives, maybe, you know, up around 73-ish, but maybe we're going to do some work, but take a picture. And down here, everyone thought I was, you know, too optimistic. One of my mentees said, but here it is. So a couple of negative days. Actually, you know, on the daily, we did diverge. It's a little high and it may have to do some work, pull back, go again. But I think it's dangerous here. And it's the first time in my career or in a long time you'd see the NASDAQ making a new high and S&Ps weren't even able to take out 2,800, at least not yet. So your first sign, if you're a conservative trader, would be seeing the S&Ps back under 2740, which if this was a breakout, just like the dollar, I don't think you want to see it under 2740. I think even Greg brought that up yesterday. 2740 would be some type of overlap. So don't know if that's going to happen today, but there's a lot of risk over the weekend. And then next week, man, you have central bank after central bank after central bank. So, you know, if you had a good week, take it, savor it, pull some of it out of your account, spend it, make it real so they're not poker chips. Convert it into silver or a bond or cash. You know, I think it's important that people, when they have a good week, pull a little something out of your account to make it real. That's why when you walk into a casino, you convert your dollar into chips or a card because it doesn't seem like real money. And sometimes our trading accounts don't seem like real money. So make it feel like it, and, you know, enjoy the fruits of your hard mental work to be successful in a game that's always trying to throw you off. Okay, so everyone have a great weekend. I'm bringing Blake on now. No guests today on TGIF.
Yes.
No guest unless you want to be the yeah, no guests today.
Guest.
So
no guest.
huh?
What the hell are you doing what the hell are you doing to us, Dale? I mean, it's Friday. I mean, you're supposed to be nice to us. This is the end of the week. This is
guestless Fridays. Is
man,
the
BS,
I have a few this month. I have a guy that'll bring in a lot of interest next Friday, Michael Huddleston.
I want my money back.
You do? All right. So what? All right.
Money back. Give me my money back. Give me the price of this webinar back.
I'd gladly, yeah. That's true too. Anyone who wants a refund for being in face for the last 2 years,
money's checks in the mail.
Year and a half. Yeah. Let us know. Okay. And so, what do you do on a Friday like this, Blake? You know, are you buying this break in euro? Or?
Okay. So, so I did really well overnight. I was short the dollar yen, got limited out.
Oh yeah. Nice.
Yeah, I was short euro yen.
Don't you think the whole room should have been short yen with, you know, let's see, Greg?
You mean long yen, short the yen pairs?
Yeah.
I mean, and everybody in our chat room did relatively well. I mean, if I say everybody, but I think a lot of us that were trading the markets that were
people that don't work. That share their work.
Yeah, I mean, I can't speak for everybody because, you know, I can lead a fish to water.
Yeah.
Not necessarily.
See that chart, Blake? We get under that 50-day next week. It could really accelerate.
Yeah, that's a good look.
See how it touched that line? I mean, it was right there. I mean, those were the numbers that I had pegged and some other people. 1020 for last Saturday. So isn't it nice when a plan comes together?
It is. I mean, you know, when you're asking, you know, shouldn't have everybody been, you know, long yen, short the yen pairs? I mean, the fact of the matter is we could have everybody, you know, voicing their opinions about, you know, short dollar yen, euro yen, Aussie yen, whatever. It doesn't mean everybody's going to do it. You know, a lot of people, you know, they might go, you know, I just don't see it, or, and then
Steve Volke wanted to stand aside. I forgot what his reasons are, but I'm going to interrogate him on it when he comes.
You'll get that. I think if you spoke to our community, the people that are in our chat room, either they were on board or just not involved, which
at least not the other way.
I'd rather have that happen than, you know, which by the way, it doesn't always work out that way, obviously. You know, we could all have been long yen, short dollar yen, whatever, and, you know, Donald Trump could have announced some, you know, groundbreaking trade deal with China, and then, you know, they would have gone the other way. But, you know, most of us were, I think, on the train last night of long yen or short, you know, pairs. And but anyway, and we had all the, you know, patterns in place still going. I still have a short dollar yen pattern in play going, and I actually would short the dollar yen on any significant rally today. I'm just not. I'd have to see it. It would have to come out and smack me in the face. So going back to, you know, your original question, like what do you do on a Friday? I did really well. I bought the euro. I got limited into the euro dollar, meaning I bought it on this dip at 117.48 overnight. Here, let me take the charts. I'll and if you've been using, if you use ForexAnalytix, you knew why I was doing it. So I'll show you. Here's the euro dollar. Came down to this trend line, but really I was looking at this breakout point. See that right here?
Yeah.
So when we were here overnight, we closed up here, right? Our overnight analysis in the euro dollar would have been the euro dollar closed the session below the 118 level and did manage to respect the 618 retracement of the May high to June lows. So the risk is a pullback towards the 117.50 level from here. That was last night. We were trading at 117.98 last night. I know that specifically because that's exactly what the price was when I was writing the analysis. And I said, oh, you know, I was thinking to myself, okay, we're going to pull back to 117.50. I would like to get long down there. And so by the time I got up, I got limited into a trade at 48. I got long right here. Now, we were aggressively following this morning, and I said the euro dollar is at 117.35 and testing the uptrend line, okay? But trading heavy with risk-off sentiment in the markets ahead of the G7 meetings. When it dropped, you know, into the 20s, bounced back to like 40, and I got long at 48, and I'm like, you know, I'm just going to take it off the table. I took an 8-pip loss actually in the euro dollar. I had such a good night overnight in my positions. I was like, why deal with, you know, why deal with it from here? Yeah. So again, you know, and obviously if I would have stayed in the position, I'd be slightly higher. I'd be slightly up right now instead of taking a 8-pip loss. But you know, asking the question, what do you do on a Friday? For me, it's because I had such a good week, one of my better weeks actually. I'm not doing anything, but that's because that's more of a product of my week being as good as it was. I don't want to squander that on a Friday, which on a Friday I've been known to give back a lot of profit. So in my personal trading, so if I'm starting off Friday on a good note, which I am today, there's no sense in me taking the risk of really turning my attitude sour into the weekend. I'd rather, you know, go out on a positive note and then reevaluate everything over the weekend. And because that's what I'm going to do. I'm going to be doing analysis for ForexAnalytix all weekend long. Well, I say all weekend long. It takes me about 5 hours to do all the analysis that I do for ForexAnalytix for the weekend. So if you guys want to know what my workload is on the weekend, that's what it is when I'm putting everything together.
So you believe in the John Elway strategy? You know,
What's that?
walk away on an uptick. He
Yeah.
retired. He retired after he won the Super Bowl. What a great time to go out.
You know, it's funny. The year after he won the Super Bowl, I was at a bar in Denver, working for the Wise Trade Group at the time, and I went to visit a friend of mine that I've known from San Diego who lives in Denver, still lives in Denver actually, and he took me out to a bar. And I was going into the bathroom as John Elway was coming out of the bathroom. He
Wow.
was drunk as a skunk, and he ran right into me, or I ran into him. He staggered into me. And he was like, "Oh, I'm so sorry."
Yeah. Was
I'm
he
like, "Oh my
bigger than
God,
you?
you're
He's
John
a big
Elway."
guy.
He's a big
Big.
dude, big
Yeah.
dude, big dude.
Yeah.
I mean, I'm a fairly big man for
Yeah.
being half Chinese, but that dude's big.
Did you throw a cross body block or anything?
No, I was more in shock by John Elway. There wasn't very many people there. I mean, it was like a local, like kind of.
You didn't run the right pattern, man.
Huh?
That's why you ran into him.
I guess it was. I should have been
tight ends. Sometimes you get clumsy.
Anyway, that's a story that's neither here nor there, and
you can tell I can't wait for football to start.
I know you're
3 months. 3 months.
All right, you know what we should talk about? Let's talk about some of these major. So the euro dollar is back testing where it should, and I really still believe that in this longer term inverted head and shoulder pattern. We have to get through this weekend though. We have the G7 meetings that are going to be pretty important as far as trade goes. That's one of the reasons why I kind of want to stay out of the market at this moment, is because I'm more worried about the risks of what can happen with commentary about trade. There are a lot of reports that Donald Trump is going to the G7 with making a hardline stance on trade, and he's going to be very confrontational, which wouldn't surprise me in the least bit. I don't think it would surprise anybody here. So that's listening in. So I think the risk is around, how aggressive or how hard of a stance he takes, and how does the dollar respond to that, and how does the market respond to that, and that I don't know, and that's why I'd rather at this point in time, hold on really quick. I'd rather in this time just not deal with it and stand aside, and really just let the market do what it's going to do, and then look for the setups over the weekend and on Sunday, and say, if the euro gets down here at 117, I'm a buyer. It gets back up to 118, I'm a seller. That type of thing. I'd rather not even deal with it now. But the euro still does look constructive, I think, for bulls. The pound does too. The pound's still holding this inverted head and shoulder pattern, which I still have a long pattern in play. I'm just not long the cable right now. I've played it long on the long side twice, and I still want to be a buyer as long as we stay above, I would say 134. I know I wrote last night 134.70, but I think that's pretty valid as long as we, or 133.70, excuse me. So the pound dollar, I think if we get above this 134.75 level, then it's off to the races. The Aussie has had a really aggressive turn lower from this multi-year trend line, and this is something that in the event the Aussie rallies over the weekend and we get back up to 76.50, 76.60, I am a seller, and I'm going to really look to be a seller of the Aussie dollar if we get up there. But because I want to take a shot at it, knowing that if it breaks above 77 cents, then it's bullish. But I think this is all pretty key right up here. The Kiwi dollar, we're still rejecting the 38% retracement, and we should probably talk about the Canadian, because in 6 minutes we have the Canadian jobs report. Now, I got asked this morning by Benedict, who is also a bank trader who's in our chat room. He asked, hey, do you have or does anybody have a feel on Canadian employment? And I personally, I don't, and I don't think the market does either. I don't really even think the market's caring too much about Canadian employment today. I think the consensus view is, even if it's a strong number, the Bank of Canada is going to be relatively what's the word I'm looking for? Not dovish. I guess dovish might be the right word, but is going to be cautious ahead of any, waiting more on NAFTA than anything. So even if the number is strong, and the Canadian continues lower, I still think that the potential for a break above 130.50 is high, which is really critical resistance in my opinion. It's this multi-year trend line that we stopped at. It, we break above 130.50 and the dollar Canadian is probably gone, but that's going to coincide more with some NAFTA headlines than anything. I would assume that NAFTA's off, or bilateral trade negotiations between the U.S. and Canada have gone completely sideways. So frankly,
Blake?
yeah. What's up,
So,
Sal?
sorry. Hi. Sorry
No,
to interrupt.
please.
If I may add just one thing. What you said about the Canada employment, I agree 100%. It's the same that we were talking about payrolls the other day. Most Western economies are now in near, not uncharted territory, but are in near full employment. You get the States, Canada, the UK. Unemployment is very low. You only have the EU, on which unemployment is high, but that's just because of countries like Greece and Spain who have 50% youth unemployment. But overall, I agree 100% that we know that there's good employment in all these Western countries. The main points to look at are other things, such as NAFTA, like you said, for Canada, or other things like inflation for the US and etc. Just wanted to interject that.
Yeah, and I think that's really the overarching issue. So what I would probably do if I was trading today, and I was trading if I was trading the Canadian, what I would probably do is trade any extreme. So in other words, if the number is good, let's say, and by the way, here's the Canadian chart as far as like employment change. Okay, and unemployment rate's been staying the same at 5.8%. So as long as that doesn't tick up, I think it's whatever number we get, as long as it's a beat, it's going to be a beat, which we did beat last month. But we had a couple months of weak numbers. But if the Canadian number is strong and the dollar Canadian, makes any significant dip down towards like 129, you probably want to be long. And the flip side is if it's a weak number, we get back above like 130.30, I think you want to be short. I don't think that you want to get too aggressive as far as directional without having any without having any confirmed news out of NAFTA. I don't think there's any reason to be aggressively bullish or bearish. So with that being said, and by the way, since I'm not trading, I'm not going to trade this number. I'm actually going to I might trade the number, I guess. I think if we got to 130.40, I might actually short it. I might, if I got lured into it. I think, but to get lured into the market, we'd have to be really aggressive one direction or the other. And I'm going to stick around for the number, and then I'm going to pass it off to Steve here, and you too, Stelio. So we'll hang out for the number. But like I said, in order for me to trade it, we would have to go to an extreme. Before big numbers, and you guys have heard me say this before big numbers, we tend to go mid-range. And I would say that we are mid-range. You look at the high here, the low here, we're pretty much right in the middle of the range, right ahead of the employment numbers. So trying to buy or sell the dollar Canadian at this moment in time or over the last hour, you're just flipping a coin. You're just, and I, as a trader, that's not what I do. I don't like to if I don't see the probabilities in my favor, why am I going to take a position? So, you know, I think it's a crapshoot at this moment.
Nice euro pound short by Amanda yesterday. Amanda, how many pips did you pull out of it?
Yeah, she's not going to mic up, but she
could write it. She could write it.
Oh my God, look at the weak number. Hold on.
It's a negative, yeah, negative 7.5 compared to plus 18.5K.
Oh my God, I missed it. I was going to short it at 35 and I missed it. Oh, what a doof. Oh man, I tried to nail that and I missed it. So
maybe.
Huh?
Oh, you'd be out already?
No, I missed it. I was trying to short it at 35 and I missed my
Oh, you mean at 30.50?
Yeah.
Oh, okay.
Yeah, I tried to short it up there because it reached and just what I was saying, and it was like,
yeah,
man, I mean,
you miss trades every day.
I do. I try to ping 35 and I have a for my institutional platform, I have a basically a 10 pip limit on market. So I'll take a market order up until 10 pips. So, but it was obviously moving so fast that when we spiked up there, I couldn't get it off in time. We spiked up to 35 and I went to short it. And by the time I went to short it, it had already dropped past 20 on the downside. So, man, I was really trying to do that bad boy. That stinks. But anyway, see, we were just talking about, you know, selling the extremes. If you manage to pick off the extreme, you might have been able to pick off, you know, 10, 15, 20 pips. But the number that we got is where's my, there it is, negative 31,000. So, but part-time employment had increased, full-time employment, how does that happen? Full-time employment,
because they were all Toronto real estate brokers.
Oh no, full-time employment really dipped here. So anyway,
the realtors in Toronto.
Yeah, so
it's the same like we were saying with US jobs. You know, if you look at the quality of jobs, it is definitely deteriorating. Even though
it
total
is.
number of jobs is going up.
It is. Participation rate is about the same as 65.3 versus 65.4 prior. Hourly earnings have gone up, and that's why it went up to 3.9% here. So you guys can see the number right here, 3.9% versus 3.3. That's why that rally that you see in the dollar Canadian didn't stick. It's because you got some inflationary data. Now this is a big deal in my opinion, because this is what's going to feed into a hawkish Bank of Canada should we get a NAFTA deal done. I'm gonna tell you this right now. If a NAFTA deal gets done, I am buying Canadian dollars. Period. End of story. Whether it's short Euro Canadian, short dollar Canadian, buy Canadian yen, I'll have to figure that out at that moment in time. But I am buying Canadian dollars should a NAFTA deal get done, because I think the Bank of Canada will have to, despite the potential housing crash that Canada may feel, the economy is running hot, and they have to kind of step on the brakes a little bit, and they are going to have to raise rates. So, but that's the chances of NAFTA deal getting done is not set in stone. It's not at all. Especially when you're dealing with Donald Trump, it's definitely a wild card. So I can't bank on that and just start buying Canadian dollars yet. And the flip side is if a NAFTA deal gets thrown out the window and we back out of NAFTA, we being the US, the dollar Canadian will be going to probably, I would venture to guess, we'd be heading towards 140 in the very, very quick future. Like I said, without any concrete evidence, I can't trade it more than, intraday for 5 minutes. So basically
hello,
What's that?
What's up? It's Greg.
Greg is here.
Dude, 2 days in a row? Get out of here.
He's addicted now.
Yeah.
He's going to be replacing Steve. That's good news.
That is good news. Jeez. We've been trying to get rid of that Steve guy forever.
Who are you interviewing
Just kidding,
today, Greg?
Steve, how you doing? Steve should be here this morning too. Good morning, Steve.
Greg has an interview at the top. Who are you interviewing today? Todd Gordon?
Yeah, we shoot sometimes.
Okay.
Oh man, look at this Canadian
Blake,
getting
look at that,
crushed
yeah.
right now. Look at
I
it
was
just
gonna say
coming
that.
unglued. I cannot believe I missed that position. What a bozo.
Flash crash
So-
Gordon.
So what's up, Grega? What's happening, man? I see you've been pretty active in your patterns in play here, and you have an Aussie bearish trade that you're looking at. So what do you got?
Actually, if you will take a look at this, at the trend line, actually channel was broken from 2016 lows. And this channel or trend
Wait,
line was...
I have to flip it over to you because no one can see what you're talking about.
Yeah,
oh, here we go.
So this trend line was actually been broken quite decisively here
Right.
in April, and we have seen a recovery, but recovery, as you can see, was much more slower compared to the previous decline that occurred through this trend line. And I would not be surprised to see this as a correction, and we may be going to retest those lows from early May. So I'm looking for weakness to resume here on Aussie dollar.
Grega, on basic technical analysis, I 100% agree with you. And our bull bear line is basically at 77 cents. That means as long as we remain below 77 cents, it's bearish. If we get above 77 cents, then the picture changes dramatically. And so I couldn't agree with you more on your analysis with the Aussie dollar. I personally am looking for a short, and you missed this probably because I was you weren't here at the time when I said this, but I said, you know, any type of rally in the Aussie, I'm going to sell it.
Yes, and we also see here on as I discussed with Daily yesterday, actually what is the confirmation mark? My confirmation is when I have a 5-wave reversal from the highs, which confirms a potential completion of a corrective recovery. And this reversal actually occurred, as you can see here, from the upper side of this flag pattern, if you want, or corrective channel. So normally wave C will complete a 3-wave rise at this trend line. So I was not in a hurry when market was trading here, but rather waited on a confirming price action, and it unfolded in this current decline unfolded in 5 ways. We also took out this swing low for the first time since market actually was trading to the upside, has been trading higher recently. So to me, that's a trend change, maybe only temporary, but this 5-wave decline suggests that we should see at least 3 waves of decline, which means further weakness after this corrective bounce. So the only question is if this corrective bounce is maybe already coming now, but what I would be looking at here is for this minor wave 4 to play out as an important resistance role here at 76.25 around there.
Yeah, let's hope we can get up there. I mean, if we can get up in that neighborhood, I'd be a seller too. So that's a great look, Grega. Thank you very much.
So actually, the big picture is very simple here. So you don't need to be I don't know, maybe some very good technician. You know, old school analyzes always rules, and clearly we have turned bearish after unsuccessful break above September 2017 highs, and for now we have lower lows and lower swing highs, which is clearly identification of a downtrend in progress. So why to fight this? You know, it's a very clear structure here at the moment.
Yeah, that's it's a great look. Hey, Greg, I'm going to be stepping out, but I'm passing the reins over to Steve and Dale and Stelio. So, hey, Greg, thanks for being here the last 2 days. Your analysis is impeccable. You're such a big part of this community, and I know everybody that listens in here, and especially those of us that follow your analysis on ForexAnalytix. We really appreciate you and the work you do. So thank you so much for being here.
Thank you. Go trading.
All right. See you guys.
Have a nice Sunday, Blaker.
TGIF guys, and don't forget Forest Park FX, our sponsor. Make sure Steve talks about them. Talk to you guys later.
We'll do so. We'll do so,
All right.
mate. Bye-bye. Hey, Grega.
Yes.
What do you think about the DXY? Do you think that this corrective move lower, despite not hitting 92.50, might be done for now? Do you see it as a three-wave correction as well?
We will take a look at just a second. I will take a look on euro dollar, because yesterday we discussed about this confirmation on euro dollar. So if there's same listeners maybe today, that's why I think that this could be more helpful. So on euro dollar, we have seen 3 waves rise so far. On dollar index, obviously 3 waves of decline. So yesterday with Dale, we discussed that at the stage when market was trading around 1.1840, I was not sure if we will continue higher for wave 3 or maybe turning to the downside. So I said that we need to see what market will do, and then we go with the market. So actually what we see now is prices is moving to the downside, but I would have to wait a little bit more. And if we can take out this trend line support and extend weakness towards 1650, then I think this will be a very important confirmation that this rise was not start or a new start of a new bullish cycle, but rather only a correction of a lower degree, which will take us much lower. So I think that
more or less the same picture with cable as well. Yeah, I mean we have more or less the same picture with cable. So yeah, I'm with you there.
Yes, the only thing is that maybe cable could be a little bit more complex here. I'm not really sure if this correction is really done here. I would love to see something more complex and maybe move into this pivot zone of that triangle that occurred start of May. Also, we always, when I'm looking for retracement, I want to see a retracement, if this is wave 2, of course. I want to see a retracement for at least 38.2%. Sometimes if bear market is very strong, you will see a retracement only for 23.6. Okay, but here, for this to be wave 2, I think it's not enough data, since wave 2 is a higher degree of this wave 4, but this wave 4 was much more complex than current rise. So I assume that we could still be continuing higher after this wave B drop, or this is not wave 2. Okay, so in either case, from a trading perspective, I would love to see something more complex, maybe even higher prices before maybe we look for some shorts.
Any chance this is, instead of being wave 2, is just a wave 4, and wave 3 was an extended one?
Maybe this could be, if this would be wave 4 like this.
Yeah, perhaps.
Yes, but here was not, you need 5 subwaves down here for this, within this wave 3, and this doesn't work out. So I don't know, I'm quite unsure about that. So, but after all, also we have only 3 waves decline so far. I'll remove this from the highs. So again, if you don't see 5-wave drop unfolding, then you cannot say that correction has ended either. So I think that this one is quite unclear, and maybe we should look at the euro pound and we get more clearer picture.
Good luck getting a clear picture from the euro pound, which is stuck during nine month period.
I know that I just remember that yesterday euro pound or this week was ticking higher. So I thought that euro pound maybe already reached a new swing high here above 88.40 from start of May. So I was hoping on a spike to a new high and now turning to the downside, which would make euro much weaker than pound, and then this would make sense what I discussed about cable.
Yeah, that perhaps we see a short-term divergence with cable shooting higher once again, but euro not doing that. Yeah, so that could satisfy,
Moment, no.
you know,
Yes.
such an
But
outcome.
I would definitely be expecting a reversal, but maybe from another high here, because clearly this appears to be a triangle. And if this is a triangle, then this is not wave 2, but wave B. And if this is wave B, then we know that this whole rise from April lows is corrective.
Corrective,
Because,
yeah.
yes, because triangle don't occur in wave 2 position. So that's why I think that euro could maybe face more weakness, could be done more damage on euro than on cable, if this pattern comes out to be correct.
Yeah. By the way, I was, as you know, I was out on a trip for business trip for 24 hours. My initial target in being long the euro USD was at 118.50, so I had an order, you know, to take profits there. Unfortunately, you know, the market almost made it there, but it didn't. You know, I really hope that the upside is not done, because, you know, I lost the opportunity of taking some nice profits up there. But, you know, I don't like the way it's reversing so far today. As you said, we need more confirmation for sure, but definitely I'm not very fond of the way it seems to be reversing.
Yes, and also maybe it's good to look at, as I discussed earlier with Blake about ASI, we have also seen some nice turn to the downside on dollar yen, which means that ASEAN could be very interesting. And
Aussie yen, thank you for reminding me, is indeed very interesting because at least from a basic technical analysis, we are still trapped in a channel that looks like a very nice bear flag. The past 2 days it has been here. I don't know, what do you think?
Yes, and actually what I like the most is that we have seen a 5-wave decline here on the 4-hour, as you can see. And this decline actually occurred after a failure attempt of this bullish breakout here at 84.46. And I'm quite sure that there were a lot of stops placed out there.
Yeah,
so
and people trapped.
The market is now turning to the downside, and those are now who were short earlier are now scratching their heads, I'm sure. And since you have a 5 waves decline, now it's time maybe to short it, especially after a 3-wave bounce. So this is clearly a bearish pattern. Also, if you take a look back from March lows, it was a 3-wave rise. And this was, and if you take a look closely at this chart, actually ASEAN really loves to make failure breakouts. The first one,
and you're absolutely right. And talking about the bear flag pattern that I told you, can you please turn this daily chart to a line chart with daily closes?
Sure.
Yeah, to a line. Perfect. Now draw the channel, and you will see it's a very nice channel.
Yes.
Yeah, you have to zoom out a little bit so you can pick up the but you get the point. This was a nice channel anyhow.
We reversed down from the upper side of the channel. It was also
exactly
some kind of a resistance here, and as I said, here was a similar failure breakout that cost what, 300 pips rally, even more.
Yeah.
Here was also a failure attempt of a bullish breakout that cost earlier.
And speaking about fake out moves, I think that we're going to find one of those in the Kiwi yen as well. I bet that a lot of people have gone to the madhouse with Kiwi yen because it initially broke below the 70, decisively below the 76 horizontal area. Then it reversed. Now it's pushing above the previous high and is getting rejected from a horizontal resistance zone I have at 77.60. Is this likely a flat correction? I mean, we had that high at the 22nd of May, then we had that low at the 28th of May. Now we have another high at 6th of June. If we reject there, is this a flat correction?
Here, I mean, on New Zealand dollar against yen.
Yes.
Right?
A, B, C, and C is done, perhaps.
Just a second to upload. think I have it here. Okay.
Yeah, yeah. So you agree from what I see here. It is a flat
Yes.
correction.
And it was a perfect reversal down, as you can
Yeah.
see from this resistance. It was a failure
Yeah.
breakout, and this appears to be a 5-way drop. If we go to the smaller time frame, so this is quite nice decline. This was probably a triangle here, so this is
Yeah,
key.
fourth wave triangle. Yeah.
Yes. So why this is key? Because if this was a triangle, okay, then we know that this recent rise, recent fall, was wave 5 that completed this first leg. Okay, so I think that we are now already in this ABC pullback. So resistance comes in, let me see here, around 77. So from there, I would be looking for more weakness maybe on Monday, Tuesday, because correction, as you know, takes time to unfold. So don't expect maybe just a sharp drop, which after all,
Yeah, just imagine in the Kiwi yen how many people got trapped being short at that daily close we had in that huge accelerating candle that we actually closed at 74.50. Then we reversed. We took out the previous short-term high. So a lot of people, you know, even those that were holding their short, they got kicked out of the market here. And now the market is a lot more free to move to the downside, I think.
Yes. So, and it's actually coming in line nicely. It's matching perfectly with ASEAN. And also everything comes in, as I see, from dollar yen. And dollar yen is very clear here. We have seen sharp drop at the end of May, and now we are just correcting higher up into 61.8%. It was also resistance from the former swing high when we were still in uptrend around 110. And this appears to be a nice bearish head and shoulders pattern actually. So I would not be surprised if we just continue to see more weakness, which would probably take other yen crosses lower as well.
Okay, great. So you must also then agree that we've already broken. I mean, I was viewing CAD yen in a very bearish manner as well. We had a very impulsive turn lower on the daily chart. Then we had a very nice recovery, a channeled recovery, if you ask me. We broke below this channel. We almost came back to retest it. I do think that CAD yen is poised to resume lower as well. Yeah, that's the channel. Now, if you take the upper line of the channel, and yes, exactly.
And actually, this was the perfect three-way rise here.
Yeah.
This was sharp decline, overlapping recovery, a new sharp decline. So this is follow through the corrective channel, which confirms that recovery corrective one is completed and that we will probably see even more downside.
Yeah, I totally agree. So you're looking lower in all those pairs. Yeah, I think all of them are very, very appealing.
Yes, actually everything came at the same time when this 10-year US note turned to the upside. Okay, so yesterday we have seen a nice rally here on 10-year US notes futures, and this can be actually start of a much more aggressive rise that we talked about. Also, I warned about this wave B pullback and this trend line, which could be now acting as a support here. So watch out for more gains here. Which is
my only objection here is I was showing the exact same chart. My only objection is I think you shouldn't be viewing the move lower as a channel, but rather as a descending wedge. So if you take out the bottom of the channel and you redraw it as a wedge, you know, exactly. I think that it's even more potent. Exactly, So that was a very beautiful, very beautiful breakout from a descending wedge. And we came back, we retested the wedge more or less, and now we seem to be finding support. Yesterday, ZN had an outside white candle, so yesterday's candle was, you know, quite a strong. quite a strong bullish reversal. So I do think that indeed it's looking quite well placed for another push to the upside.
Yes, exactly. I totally agree. So 120 is probably next confirmation, a breakout that will take us higher. So on the other hand, I would watch out for S&P 500 to face maybe reversal from the near-term highs.
Greg, just out of curiosity, could I see your count on the 10-year monthly? Because I was looking at the monthly, and this pullback that has everyone bearish the bonds long term almost looks corrective to me. Okay, you have it that way too.
Yes.
That we could actually, this could actually be a big surprise, because most of the people I talk to and most of what I'm reading is people are trying to bottom pick commodities. They're worried about inflation and they're bearish bonds. So I'd say most people are bearish bonds and bullish commodities, and this monthly says that they could be really wrong-footed in here.
Yes, we are definitely at very important levels here. And even if this major high was made here, right, you would still probably experience a free wave recovery into this correction.
Okay, that's way up there. So that might be 1.618 of the first bounce we recently just had, up towards 128 or so.
Yes, exactly. So this is the region where I would expect a reversal, minimum upside. Maybe we'll see. Maybe we'll see a new turn down from there. Okay, or just continue strongly to the upside. But for the next few weeks, months, I think that there is a chance we will retrace back into this yellow box, and then we'll see what happens there. It depends what kind of will take us there.
But that is an interesting count. No one's talking about that the bonds have not topped out yet. Don't you agree?
Yes, it's that's why I love Elliott Wave, because it's always on the other side of majority.
Yeah. Thank you, buddy.
Sometimes what seems to be obvious isn't the right way to be looking.
Joe Granville used to say, I know you're probably too young for him. You remember him? No, Joe Granville? He used to say, what is most obvious is obviously wrong.
Yes.
Yeah, but
yes, I heard that before.
Which is a good point. Now, let me add to this. We have a very nice comment from Leon. He says, because it's very correct, he says, Dale, with strong economy, lower rates will be bullish to commodities, not negative. And he is absolutely right with that, about that. Obviously, I'm guessing that Dale doubts that the economy can stay strong for much longer. And now let me remind you that we were already looking at one of the second in history longest business cycles. So, thinking that this business cycle, I mean, the expansionary phase of this business cycle cannot be resuming for much longer is,
my basic thesis, Steve, is that the Fed has been tightening, so they have insurance for the next recession, and buying that insurance ensures the recession, because I don't think the economy is really humming along. And these employment numbers that everyone's saying records, if you look underneath it, there's a lot of reporting that the numbers really aren't reflecting what's truly happening. And even Stelios mentioned it in Canada, job quality. So, I'm thinking the economy was stable, and Fed rate hikes, which have been going on for a while, and there's a big lag before they affect the economy, is another misstep, just like the Fed did in 1937 when we were coming out of the Depression. They started to tighten and took us back into one. It took World War II to bail us out.
Yeah, I agree with you. I think
that's what I'm thinking here.
I think that's a big risk.
They make mistakes all the time. I mean, Greenspan stayed too easy, too long, and too tight, too long. They make mistakes too, and they've been at it for over 100 years, and they still make mistakes. I think they're making another one.
I think their biggest mistake is that they're trying to influence the business cycle, and for every single time they do that, the economies find them get to a worse position than they were in the previous one. Plus, by intervening, they make it easier for politicians not to be prudent and hoping that monetary policy will permit
fiscal irresponsibility.
Exactly, fiscal irresponsibility. Yeah, you stated it in the proper way. Exactly.
Yeah.
And that might, yeah, exactly. So that means that directly and indirectly, the fact that central banks are intervening so much is what creates bigger and bigger distortions. And I'm really scared of how this is going to end at some point.
Because they're trying to eliminate the recessions, and you just can't do that, right?
Yeah, it's like trying to keep the sea from having rough days, right? I mean,
Exactly.
you can't go against nature of things. You can for a limited time period of time, but not forever. And,
well, they think it's great, and when it happens, they call it great anyway. The Great Recession. Was it great for you? Oh gosh, in Greece. Great. Okay. Anyway, what a great week, guys. Grega came in a lot this week, and Blake was back, and we had a day off from Steve, and I just feel so blessed to, have witnessed all of this in the last 5 days. We were steering people the right way. People are calling Trent to find the right broker. Great week, team. What do you think, Face? We hope we added value to what you're trying to accomplish as traders. That's our mission, is to build up and edify traders every day. Can I get a Y on mission accomplished this week?
Dale, we have a lot of people trying to persuade Grega before we're gone to give us his perspective on gold.
Okay, so, yeah.
Grega, if you're still here,
I'm on my knees, Grega, begging you to show us a wave count in gold.
I'm sure that Stelios would love to see bullish counts on gold and silver.
No, silver, yeah. And he showed gold and silver the other day, but Grega prefers.
By the way, Grega, speaking of metals, you remember that I had you talking some weeks ago about copper, and I told you that I think that copper is consolidating before the next big move higher.
Yes, I remember, because I also draw that triangle as I know.
Yeah, so copper is actually breaking out. So do you think that gold is about to follow?
Actually, I think if this market should be in some kind of a similar patterns, they are not. But if we think that they should be, then what I assume it will happen that copper will actually come down now, especially if Aussie will continue to weaken. So I'm a little bit worried about move to the upside on gold. I still think that gold can stay just sideways here, especially if stocks will also come under pressure, because gold will be trapped between risk off and between weak Aussie. So I'm not really convinced about this gold that will break strongly to the upside, but I still think that if you want to be positioned long on metals, rather look at silver, because gold-silver ratio is declining, as we covered yesterday. But we are still sitting on that trend line, which is very important. So I just think that we have to see what will actually happen here, if we get a strong break to the downside or maybe an impulsive reaction to the upside, and then in which direction we should trade. At the moment, we are at the do-die zone here. So,
well, if the euro's going to break down and confirm, take out its channel line, gold's going with it, don't you think?
Yes, it might. Yes, but interesting that gold is actually it's moved to the upside today.
Yeah,
it holds support quite well, despite very aggressive move down on Aussie and even on euro in the last few hours. So I I don't know.
I think that's because Dennis Rodman's going to be in Singapore with Donald Trump next week. Dennis Rodman, he is. He's going to be there. So I promise you, I'm not making this up.
We are saved. That's it. The world is saved.
Yeah, we have nothing to be concerned about now that we know Rodman's going to be there. He might even be involved in the process. I wonder if he's going to wear a woman's wedding dress like he used to. The worm. They call him the worm. Anyway, so we could just call North Korea problem solved because Dennis will be there with Donald. Double D.
But he was there already a few times, right?
Yeah, he's good. He's good friends with Kim. In fact, I think Kim beat him in a game of one-on-one. Dennis didn't want to beat the guy. He would take him out.
They probably had Rodman tied down to a chair or something.
Anyway, so everyone have a great weekend, huh?
Have a great weekend, everybody.
Have a great weekend, Steve and Grega and Stel, my Trading Warrior brothers, and everyone in Face. Enjoy, do your work. It's going to be a wild week next week, don't you think, with all these central banks and everything happening? So, hope everyone had a good week. Join, subscribe, lock in your rates, and get a hold of Trent to find the right broker for you. And with that, I wish everyone a great weekend. And I hope you had a great week. And if you did, don't just count your pips, count your blessings. And we'll be back here Monday. And we'll kill it next week again. All right, everyone. Adios. You're very welcome.